Hello guys, so today I will be discussing the EMA, the exponential moving average, and I will also be discussing the MACD, which is the moving average convergence divergence, and the VAT, which is volume weighted average price. So the first one I'm going to talk about is the moving average. So I use the EMA, which stands for exponential moving average. This is a type of moving average that gives a lot more relevance to recent stock price movements to identify trends quickly. So you also have a small moving average as well, the SMA. So the difference between them is that the EMA reacts faster than the SMA to short-term fluctuations. So I find for day trading, when I'm using the 1 minute and 5 minute chart, it's a lot more accurate. So for day trading, I find the EMA to be more useful. So I used the 9 EMA, the 20 EMA, the 50-day EMA, and the 200-day EMA. So the 9 EMA, it tracks the last 9 candlesticks of the stock. So as you can see, the 20 EMA then follows the last 20 candlesticks of the stock's movement. So what you will see sometimes is the stock price may suddenly fall and the 9-day moving average will cross below the 20-day moving average, which can indicate a shift in momentum from bullish momentum to potentially bearish momentum. So I'll show you an example now on the screen. So as you can see here, the stock, I drew a little box around it. So as you can see, the stock reached a high of 730, and then as you can see here, it double topped here around this 730 range, which is a bearish signal. And then you can see here the 9 moving average, this purple line here, it crossed below this 20 moving average. And as you can see, that is bearish. That's bearish signaling bearish momentum, signaling they may be gaining control. And as you can also see, the MACD, which is here, as you can see with the mouse, you can see it crossed bearish. And as you can see, it went all the way down, and then you can see it crossed again and then went back down again even more. So that is one thing you want to be looking out for. So this is where the MACD can be very useful. It's another very well respected indicator. As you can see here, as I said before, the MACD crossed down, signaling that momentum is changing. So it can also be a great indicator lining up with the 9 moving average in the opposite way when it crosses above the 20-day. So as you can see here, the 9 moving average crossed above the 20-day moving average, and as you can see, the MACD also turned bullish. And as you can see, if you would have entered here, that would have been a nice little gain from 7 to 730. So you want to be trading when the stock is in the bullish momentum at the MACD. When it's in the bearish, you don't want to be really trading in this range. It's very risky. So that's another indicator that's very well respected. The EMA, the exponential moving average, and the MACD, moving average convergence divergence. So you want to usually be focusing on the front move of the stock. So for example, when they drop news, you wait for that pullback, see if the technical indicators are lining up, the MACD, the EMA, the volume. Volume is number one. You want to be trading stocks with high volume. It confirms these setups a lot more. So that is some of the things you want to be looking out for. So the MACD indicator, which stands for moving average convergence divergence. So what this tells us is that when they're converging, they're moving apart, and when they're diverging, they're moving closer together. So the MACD is a well-respected indicator, and it works well with these other indicators that I'm mentioning. So the EMA, the vwap, the MACD. So I will now show you another indicator, which is the vwap, and this is another well-respected indicator when it comes to day trading. So as you can see here, the volume weighted average price, the vwap, hits this vwap line here, and as you can see, when the stock is above the vwap, it acts as support. So as you can see here, it bounced off the vwap, which would be your support, and then it went and made a triple top of a new high with the 7.30. So that's a bearish signal then when you see a triple top, as it indicates the price has hit that price 3 times and failed to break it. So then you could be looking for some downtrend after that. But as you can see here, the VWAP, it bounced off here, strong move off the support, and went up to that 730 range again. So when the stop price is below the VWAP, it then acts as resistance. So these indicators can be very crucial and helpful for day trading, in my opinion. So you want to be using them all together as they work as like a team. So you want to be using the MACD, the EMA, the VWAP, and high volume confirmed setups a lot more. So for day trading, you want to be using the 1 minute chart, 5 minute chart, the EMA, EMA 9, EMA 20, EMA 200, the VAP, and the MACD. In my opinion, they're all very well respected indicators, and I find them very useful when day trading. These all apply very similarly to swing trading as well, which I know a lot of you guys do. So the only difference will be you would want to focus on the 4 hour chart and the daily chart more with these indicators, as these can be very crucial. So don't forget to like and subscribe if you found the video useful. Thanks for watching.